Assalamu alaikum, everyone. We had a very interesting day today in the markets. And so I wanted to cover exactly what happened, what my take is on the recent dip in the price of Bitcoin, Bitcoin proxies, even exaggerated the dip in Bitcoin. And then we'll talk about some recent moves that I made in my portfolio. So without further ado, let's get started. As always, this is not financial advice. Be sure to do your own due diligence before making any investment decisions. So today, the big news event in the markets was the report that came out, which suggested that the Bitcoin ETF was going to be rejected by the SEC. And we saw an hour candle that took us from 45,000, north of 45,000 for Bitcoin to just over 42,000. In fact, it dipped. If you look at the bottom of this candle, it dipped all the way to 40,000 before recovering to 42,000. Now, a lot of people got spooked by that. They were wondering if this is a sign that they should sell or not. And I'm going to give you my take and tell you, exactly what I did. So just a bit of background on this change in price. There was close to $500 million in liquidations that happened as a result of the report that came out suggesting the SEC was not going to approve the Bitcoin ETF. And this is the case with markets that are dominated by derivative products. Even a small change in any in a small change in price will end up being exaggerated by the overall movement because there is so much margin in the market. So many people are borrowing money and they get margin called when a dip in price occurs, which causes more selling, which causes more people to get margin called, and so on and so forth. Now, as halal conscious investors who stay away from margin, inshallah, we benefit from these exaggerated movements because we get to scoop up assets at less than what they're actually worth and what their fundamentals suggest they should be trading at. And the report that actually came out regarding the Bitcoin spot ETF basically suggested, now this was the same source of the report that caused, a lot of people are saying, caused the jump to 45,000 in the first place, which was suggesting that the Bitcoin ETF approval could come, within the next 48 hours. The very next day, they come out with a report that says, oh, actually, the Bitcoin spot ETF will be rejected. Now, I've been saying on this channel for a long time that, and to PIF members, I've been telling them, hey, do not overextend yourself. The approval in January is not guaranteed. We're giving out percentages. This is, a 95% chance of happening. This is, 98% chance of happening. The fact of the matter is it's not a done deal until it is a done deal. And what we know for sure from Gary Gensler is the fact that this guy doesn't want to approve the ETF, right? If there's any opportunity to weasel out of approving the ETF, he's going to take that opportunity because this is a person who has his eyes on the Treasury Secretary position. He sees himself as an agent of the US dollar, basically, and he doesn't want to do something that jeopardizes the position of the US dollar as a store of value. And Bitcoin does that. A Bitcoin ETF will absolutely be used as a store of value by many investors. He knows this, and he's going to try his utmost to weasel out of approving a Bitcoin spot ETF. And so if there's any opportunity for him not to approve it in January, he's gonna do that. But if he doesn't approve it in January, what's going to happen is because there's a court decision now, and he is basically forced to approve it sooner or later. So if it's not approved in January, it's probably going to be approved in March, which is the next deadline. So my thinking on this, and just to read a bit from the report, they say so the reason for their bearishness on the prospects of the Bitcoin ETF in January, they mentioned that the current 5-person voting commissioner's leadership, critical for the ETF approval of the SEC, is dominated by Democrats. And Democrats led by Senator Elizabeth Warren have been, not welcoming of crypto. SEC Chair Gensler is not embracing crypto in the US, and it might even be a very long shot to expect that he would vote to approve Bitcoin spot ETFs. An ETF would certainly enable crypto overall to take off, and based on Gensler's comments in December 2023, he still sees this industry in need of more stringent compliance. I don't think that has anything to do with his reasoning. From a political perspective, there is no reason to approve a Bitcoin spot ETF that would legitimize Bitcoin as an alternative store of value. That's the crux of the issue. They don't want to legitimize Bitcoin as an alternative store of value versus the US dollar. But I'm sorry, when you print so much of something, there's no cap, you inflated people's savings into nothing. There's now $35 trillion in US debt. What do you expect people to do? I mean, you have to give people an option. You can't just force them to keep their savings in a currency that is being printed like there's no tomorrow. This is not the fault of Bitcoin. This is the fault of the people controlling the US monetary policy. And the way that currency is created in the US through debt, that's the issue, not Bitcoin. This is going to happen whether you guys like it or not. So that's as it relates to this report. And my take on this is buy the rumor. At least this is what I'm doing. I don't know if the Bitcoin ETF is going to be approved or not in January. It may not. But here's how I'm looking at it. If I buy the dip, if it's approved in January, great. If it's approved in March, great. I just have more opportunity to buy at lower costs. Hopefully, if this dip continues, I'll continue to buy. If I sell, whether the ETF is approved in January or March, I'm not going to be happy, right? Because eventually it will get approved and eventually we're going to have a run up. It is inevitable, even if they try to delay it. And even let's assume, because as I mentioned, it's not a done deal until it's a done deal. Let's assume the ETF is never approved. Well, still Bitcoin has a lot of tailwinds in its back. So you have the stock to flow. So the flow is going to drop in half in April. We have the halving. We know it's coming. It's programmed into Bitcoin code, and that's going to drop the flow of new Bitcoins in half. This is so economics 101. When you have supply dropping by half, even if demand stays the same, right? Without a Bitcoin ETF, even if demand stays the same, we should have a run-up in price. And based on this model, which has so far been the most accurate model for predicting the price of Bitcoin, we are in the early bull stages of this cycle. As I mentioned, Bitcoin halving clock, there's just over 100 days left for the halving. So there are tailwinds for Bitcoin, even without the ETF. And if you look at the Fed minutes that were released today, Fed officials acknowledge the possibility of interest rate cuts by the end of 2024. They believe the policy rate is at or near its peak, and all officials state that substantial progress towards the Fed's 2% inflation target has been achieved, which means that the worst of the tightening is behind us now. So now we can look at we can assume rates are going to remain at their current levels and will start to drop in 2024. How much they drop is anyone's guess, but there is consensus within the Fed, at least, that there will be some cuts to rates. And as we know, interest rates are to asset prices are what basically gravity is to objects. Higher interest rates pull asset prices down. Lower interest rates allow asset prices to go higher. So as interest rates go down this year, you're going to see asset prices go higher. And that's across the board. And then finally, I would remind everyone who is in the Bitcoin investing space and is considering what to do with their Bitcoin. Should they panic sell, or should they perhaps buy more? Past results are not a guarantee of future outcomes. However, they are often good at giving clues at what someone can expect. As the saying goes, history doesn't repeat itself, but it does rhyme. And if this actually holds true, you can see that Bitcoin as an asset class since 2011 basically blew out of the water any other asset class. So annualized return, if you look at this far column on the right here, annualized return was just under 150% for the last decade plus for Bitcoin. Compare that to the US NASDAQ 100, which was less than 18%, US growth, which was 15%, large cap, just under 13%, and Europe, Australia, and the Far East was just over 5%. So nothing even compared to the performance of Bitcoin. And I think, by extension, these Bitcoin proxies will do perhaps even better than Bitcoin during this bull run. So things like miners and other cryptocurrencies that have viable projects, I think will do even better than Bitcoin. Now, on that topic, I actually bought Solana this morning, dipped before below 100. I don't know if this is a falling knife or not, but it was too tempting, so I bought some. Solana when it dipped below 100. And then this is unrelated, but I did feel a need to speak about it because I did mention this name on the channel before. I sold Pfizer yesterday, just divested completely after its reliance on interest no longer passes our screens. Keep in mind that the screens we use at PIF has a cutoff of 2.5% and not 5%, and we take that 2.5% is inspired by the zakat obligation that we have, which we think suggests that we shouldn't have more than 2.5% at any given time that requires purification. At least we shouldn't know of more than 2.5% of our income requiring purification. So that was a quick update on the markets. I hope it was useful. And yeah, until next time, take care of yourself. Assalamu alaikum, and peace be upon you all.